welcome to the Bourse Report. I am Andrew Saber and I'm holding on for Cyril this morning. Today we'll take a look at the local equity market, how it's been performing year to date, as well as over the last couple of years, and investment opportunities that are available to the local investors who have a medium to long-term horizon, as well as looking for cash flows. So we take a quick look this morning at the composite index, how it's been performing year to date. It's down 14%. Last year it was down 8.9%, and in 2022 it was down 11.1%. Over the last 3 years, the index has been down almost 30%. So it's been a tough year for years for local investors. But with any decline, there is opportunity for the medium to long-term investor, of course. The cross-listed market index has down 14.8%. Last year it was down 5.6%, and in 2022 it was down almost 30%. Taking a quick look at sector performances, the banking sector, the largest sector in the market, as represented by all the banking securities, and comprises 55.6% of the overall market cap. It was down 13.7% this year, and last year it was down 11.1%. The second largest sector in the market, the conglomerates, down 5.6% year to date. Last year is down 2.6%. So faring a little better than some of the other securities, but still down nevertheless. The worst performing sector continues to be the energy sector, down 54.5% year to date, and last year it was down 53.6%. The one security in that sector being TTNGL. Taking a quick look at trading activity by value and volume, it's been a tough year for the market, again, reflected in the values that are traded. Values at the end of the September period, year to date, it was $512 million, and in 2022, it was $1.29 billion. So it's a fall-off of almost 60% in market value, and year on year, the values have fallen by over 40%. So less liquidity and trading opportunity in the local space for the market overall. And volumes itself have fallen away as well. Volumes traded in the first 9 months of the year is 58 million shares, and in 2022, it was 139.5 million shares. Taking a look at the sector PE valuations and dividend yields, we take a deeper dive and you'll see the banking sector PE valuation very attractive at 10.5 times and dividend yield 4.9. The conglomerate sector PE 13.2 and dividend yield 3.4. The dividends are much higher in the non-banking finance sector at around 6%, and the PE multiple 11.9. There are a couple of securities in this sector that are traded in single digits, as well as the conglomerate sector that are traded in single digits as well. So in terms of the dividend yields, when you compare it to deposits or savings deposits, which are probably less than 1%, money markets are between 1% and 2%, and term deposits which are between 3% and 3.5%, the dividend yields are much more attractive in terms of an investment and cash flow option. Looking at some of the banking securities and their PE multiples, we do think the valuations right now are very attractive, and you'll see this represented in the graph when we look at current PE valuation versus 5-year lows and 5-year highs. So we saw that the sector average. The sector average currently is 10.5. The 5-year low is 10.1, and the 5-year high is 21.9. The largest security in the market, Republic, current valuation is 9.3. The 5-year low is 9.3, so it's trading at 5-year lows. The peak was 24.4. FCI, North CIBC Caribbean, their average 6.1 over the last 5 years, and it's currently 6.2, and it peaked at 11.9. So very attractive valuation across the board for many of the securities. And this is one metric that definitely investors should pay attention to. We haven't seen valuation at these levels in quite some time. We take a deeper dive into Republic and looking at their PE and dividend history. Republic PE 9.3, the trailing dividend over 15 months is 5.6, and were we to annualize it, it's roughly 5%. Dividends, the final dividend for Republic is coming up due in December, and traditionally that is their largest payment. So investors looking for some cash flow short term, Republic is one security you should consider. And even at 5%, it's very attractive and much higher than we've seen over the last few years. In 2020, it was as low as 2%. And one thing to bear in mind, Republic continues to perform very well over the last 5 years. Last 3 years. Their earnings growth has been on average 15%, and the first 9 months of the year, it's been around 19%. The company has benefited from lower credit provisioning. So short, very attractive dividend yields, very attractive PE multiples, and the company has been performing. So very good security to have a look at. The next security we wanted to highlight is Massey. Very quickly, PE at 9.9, close to the market average over the security average over the last 5 years. Last year it was 12.6, so it's come down. Dividend yield 4.4, very attractive, highest over the last few years. The company has been struggling a bit, for want of a better word. The earnings have been down the last couple of years, but very strong company. Over 50% of their revenue is outside of Trinidad, and we think this is a good currency hedge. The share price itself is around 350, is multi-year low. We haven't seen this price in quite some time, and the last time the security peak was, I think, when it went cross-listed, and it traded as high as 676 in March or February 2022. So the pullback in share price, attractive valuation, we think this is a security one should consider as well for their portfolio over the medium to long term. Some of the key market drivers we wanted to highlight: continued economic growth for Trinidad. IMF expects 1.6% this year, GDP growth, and next year 2.6%. Continue to expect inflation to continue to cool as in the face of stable local economy and international economy as well. Resilient earnings, as I mentioned, Republic continues to do well. Many of the companies we've seen, if not double-digit growth, single-digit growth. Not all companies, but most of the companies have been doing fairly well, and we've seen resilience in earnings, very attractive valuations, as I mentioned, and appealing dividend yields. So for the medium to long-term investor, there are opportunities in the local space, and you must be patient, and while you are getting compensated for that patience with attractive dividend yields. If you want further information on these investment opportunities, please give us a call at 226-8773. Visit our website, bourseinvestment.com, or email us at invest@boursefinancial.com. Thanks for joining us today, and do have a wonderful investment week.